Rolex is losing market share for the first time in decades, and three luxury watch brands are quietly stealing their dominance in the booming pre-owned market. The numbers tell a story that might surprise even the most devoted watch enthusiasts. While Rolex still commands an impressive 34.2% of the global secondary luxury watch market, its grip is loosening. The pre-owned luxury watch market is experiencing unprecedented growth, with industry projections showing it will reach $63.7 billion by 2034, up from $24.9 billion in 2024. That is a staggering 9.9% compound annual growth rate. But here is what is really remarkable. Experts at Deloitte predict this secondary market will match the volume of new watch sales within the next decade. We are witnessing a fundamental shift in how people buy luxury timepieces. For 3 consecutive years since the pandemic bubble burst in spring 2022, Rolex has been losing market share. The brand that once seemed untouchable, riding high on artificial scarcity and speculation-driven demand, has been steadily declining since the first half of 2022. While Rolex remains the undisputed king, 3 brands have emerged as the primary beneficiaries of this historic shift. The first brand is Omega, and their rise has been nothing short of spectacular. Omega now holds the second highest market share of any brand in the secondary watch market, and unlike Rolex, they actually increased their position in the first half of 2025. While Rolex fell victim to its own hype cycle, Omega took a different approach entirely. Arjen van de Waal, CEO of Watchfinder & Co., highlights the stark contrast. He notes that 2 brands they have seen strong growth with include Omega, and that this growth has been especially pronounced. This growth is not built on artificial scarcity or speculation. Instead, Omega has cultivated informed enthusiasts, collectors who buy COSC certified chronometer watches for their horological merit rather than for investment potential. The numbers back up this enthusiasm. When most luxury watch brands saw significant price declines in 2024, Omega managed to limit its losses to just 2%, making it the second best performer among major brand indexes tracked by the Chronopulse Watch Index. Compare that to Rolex's 6% decline, Patek Philippe's nearly 10% drop, or Tudor's 7% fall, and Omega's resilience becomes even more impressive. Specific models really tell Omega's success story. The Omega Seamaster Diver has seen its buyout value jump an incredible 60% this year alone. Men in particular are gravitating toward this model in unprecedented numbers. The Speedmaster Professional Moonwatch continues to be a horological icon that retains value exceptionally well, while the modern Seamaster Diver 300M has become increasingly sought after in pre-owned markets. What makes Omega particularly attractive is its value proposition. For under $10,000, buyers can own genuine pieces of horological history. While Rolex prices have become increasingly divorced from reality because of artificial scarcity, Omega offers what many consider a more rational entry point into serious luxury watches. The brand avoided the speculation-driven price spikes that plagued other manufacturers, which now positions them perfectly as the market normalizes. Second brand making major gains is Cartier, and their growth story is even more dramatic. Searches for Cartier watches have more than doubled in 2024 compared to 2023, according to data from luxury resale platform Fashionphile. That is a whopping 104% increase in search interest, with the Cartier Panther seeing its value literally double from 2023 to 2024. Here is what is truly remarkable about Cartier. They were the only major luxury watch brand to actually gain value over the past year on the secondary market. While virtually every other brand saw prices decline, Cartier watch models rose 2.4% over 12 months. This performance stands in stark contrast to the broader market decline and positions Cartier as a genuine alternative to traditional Swiss sports watches. The Santos de Cartier collection has been particularly impressive. The Santos 100 achieved a remarkable 26.46% increase in value during 2024, earning it coveted vintage classic status among collectors. The broader Santos de Cartier line now maintains an impressive 92% value retention rate, which rivals many Rolex models without the associated purchase difficulties. Benjamin Dubuque, partner and innovation director at Digital Luxury Group, provides crucial insight into this trend. He says Cartier, in particular, saw a 6.1% increase in search demand from January to May 2025, year over year, with demand growing double digits in nearly all markets. This is not just a regional phenomenon. It is a global shift toward the French brand's distinctive aesthetic. What is driving Cartier's success goes beyond mere numbers. The brand has captured something that Rolex, with its focus on tool watches and sports models, has not. It has captured the growing preference for elegant dress watches. As collectors move away from chunky sports watches toward more refined, versatile pieces, Cartier's heritage in jewelry and elegant timekeeping becomes increasingly relevant. The demographic driving this change is particularly telling. Cartier has become extremely popular among Generation Z buyers, who represent a fundamental shift in luxury consumption patterns. These younger buyers are not necessarily looking for the same status symbols their parents coveted. Instead, they are drawn to Cartier's artistic heritage, distinctive design language, and relative accessibility compared to other luxury brands. Many are discovering these watches through platforms like StockX and eBay's authentication guarantee service, which offer verified pre-owned luxury watches with buyer protection. The French brand's growth extends beyond traditional watch collecting circles. As luxury consumers become more sophisticated and move away from obvious status displays, Cartier's understated elegance appeals to buyers seeking something different from the ubiquitous Rolex Submariner or Datejust. The third category of winners represents the most interesting development, emerging challengers that are redefining what luxury watch collecting means. Three brands stand out in this group: Vacheron Constantin, IWC, and Tudor, each capturing different segments of the market, abandoning Rolex. Vacheron Constantin, one of the Holy Trinity alongside Audemars Piguet and Patek Philippe, saw its market share grow 13.4% in 2025. Founded in 1755, it is one of the world's oldest watch manufacturers, still operating. Vacheron Constantin represents the pinnacle of traditional Swiss-made excellence. Its growth has been driven primarily by the Overseas collection, which offers a sophisticated alternative to more common luxury sports watches. What's significant about Vacheron's rise is that it established its worldwide certified pre-owned program in 2024 with Watchfinder & Co. This strategic move recognizes that the secondary market is not just about liquidating inventory, it is about building long-term relationships with collectors who increasingly prefer pre-owned purchases. IWC, the international watch company, posted even more impressive numbers, with 14.4% market share growth. This Swiss manufacturer's engineering-focused approach and clean, purposeful designs have struck a chord with buyers seeking alternatives to flashier brands. IWC's growth has been particularly strong in its Pilot and Ingenieur collections, which appeal to enthusiasts who appreciate technical excellence over marketing hype. The brand's strong ties to aviation and motorsports provide an authentic heritage that resonates with collectors seeking substance over style. As the watch market matures and speculators exit, brands like IWC that offer genuine horological value are finding renewed appreciation. Tudor presents the most interesting case study in this group. As Rolex's sister brand, Tudor demonstrated remarkable consistency with 8.7% growth in market share during 2025. The brand offers styling similar to Rolex at significantly lower price points, making it an obvious choice for buyers frustrated by Rolex's artificial scarcity. Tudor's Black Bay models have become the go-to option for entry-level luxury watch buyers on platforms like Chrono24, with prices ranging from $4,750 to $7,600. These watches offer genuine Swiss manufacturing quality, distinctive design, and the cachet of the Rolex connection without the purchasing difficulties or inflated secondary market prices. Notably absent from major growth is Richard Mille, which despite commanding 6.74% of the secondary market by value according to Robb Report data, has seen limited expansion in the current market correction. What unites these emerging challengers is their focus on horological merit rather than artificial scarcity. Balazs Ferenczi, head of content at Chrono24, explains, brands like Vacheron, Lang, Cartier, Omega, IWC, and Tudor are seeing stronger growth in the secondary market compared to retail sales, indicating a shift in consumer behavior toward pre-owned purchases. This shift represents something profound in luxury watch collecting. The speculation-driven bubble that characterized the pandemic years has definitively burst. After 12 consecutive quarters of price declines, the market showed signs of stabilization in the first quarter of 2025, with prices dropping just 0.4%, the smallest decline in 3 years. The demographic driving this change tells its own story. According to Watchfinder & Company's 2024 UK market report, 45% of consumers under 20 now consider luxury watches solid financial investments. More significantly, over 80% of Generation Z watch purchases happen through the pre-owned market. These younger buyers view luxury watches differently than previous generations. They are more informed, more skeptical of artificial scarcity, and more interested in actual value. 40% of millennials and Generation Z say they are likely to purchase a pre-owned luxury watch in the coming year, a significantly higher percentage than among Generation X or baby boomers. This generational shift is reshaping the entire industry. The irony of Rolex's position becomes clear when you examine their response to these market changes. The brand launched its certified pre-owned program in December 2022, starting with Bucherer as their primary retail partner in 6 European countries, before expanding to the United States with Tourneau in May 2023. By the end of 2024, this program had grown to 107 authorized dealer locations, offering close to 7,500 watches. The financial success of Rolex's certified pre-owned program has been remarkable. Sales grew from $90 million in 2023 to $300 million in 2024, with projections suggesting the program will reach $650 to $700 million in 2025. That represents approximately 10% of all secondary market sales for Rolex watches, which industry expert Giovanni Prigigallo estimates will be worth $7 billion in 2025. But here's the fascinating part. Rolex CPO watches command a premium of approximately 30% over non-certified pre-owned models. This means buyers are paying more for used Rolex watches with certification than many excellent new watches from other manufacturers cost. The program's success actually highlights the absurdity of the current Rolex retail experience. One industry observer noted that it is nearly impossible to get any Rolex watch new at retail anytime soon. The ubiquitous scarcity makes shopping at a Rolex boutique both frustrating and surreal. They offer you a sparkling water with a smile, knowing full well they are going to deny your wishes. This artificial scarcity strategy that once drove Rolex to unprecedented heights is now working against them. As CEO Jean-Frédéric Dufour acknowledged at Dubai Watch Week in November 2025, he had noticed years earlier that in some points of sale, the number 2 brand after Rolex was Rolex secondhand. The CPO program represents an attempt to maintain control over this secondary market, but it also acknowledges that many customers cannot or will not engage with the frustrating new watch purchasing process. The broader implications of these shifts extend far beyond individual brand performance. Oliver Muller, founder of luxury watch consultancy Lux Consult, observes that the more uncertain the market evolution is on the sales of new watches, the more the secondary market will be attractive for clients in search of immediate availability and potentially also discounts. The pandemic-era bubble attracted many outside investors who did not care about the watch community, but rather saw timepieces as alternative investments. As Douglas Kaplan, Chief Commercial Officer of Bob S. Watches explains, his company's year-to-date sales receipts were up 25% as customers sought alternatives to inflated primary market pricing. The speculation has largely left the market, leaving behind a more mature, knowledgeable buyer base. These collectors are discovering that brands like Omega, Cartier, Vacheron Constantin, IWC, and Tudor offer exceptional value, immediate availability, and often superior customer experiences compared to the frustrating Rolex purchasing process. Looking ahead, the trends favor these rising brands over continued Rolex dominance. The pre-owned luxury watch market is expected to continue growing at nearly 10% annually, potentially reaching the size of the primary market within a decade. Younger buyers increasingly prefer pre-owned purchases, and they are more interested in horological merit than artificial scarcity. Rolex will likely remain the market leader for the foreseeable future, but their grip is unquestionably loosening. For the first time in decades, serious alternatives exist that offer comparable quality, better availability, and more rational pricing. Omega provides Swiss excellence without the games. Cartier offers distinctive elegance that stands apart from sports watch ubiquity. Vacheron Constantin, IWC, and Tudor represent different expressions of horological authenticity. The watch industry is normalizing after years of speculation-driven distortion. In this new environment, brands that focused on building genuine enthusiast communities rather than artificial scarcity are reaping the rewards. The question is not whether Rolex is losing its grip. The data clearly shows it is. The real question is whether this represents a temporary correction or the beginning of a more fundamental shift toward a more diverse, merit-based luxury watch market. For collectors, these changes represent unprecedented opportunities. Never before have so many exceptional alternatives to Rolex been so readily available at reasonable prices. The speculation may be over, but for genuine watch enthusiasts, the golden age might just be beginning.